What is up, guys? Welcome back to the channel. Today I'm going to be going into how to trade a triple bottom pattern, specifically for crypto. And yeah, we're just going to hop right into it. Lesson 1. So today we're going to be going into what a triple bottom pattern is, and here's a very simple example of what it plays out like. So to put it as simple as possible, it is when price is in a strong downtrend and it breaks through a previous support level. In this case, we'll be calling it the neckline, right? And then it finds 3 bottoms consecutively at the same level, right? So price came down, broke through support, found new support. Price reacted here at the first one, pumping all the way back up, but this time it rejected this neckline, coming all the way back down. Support again, reject, support one last time. This time it finally breaks out, as you see here, and then it has a slight pullback to retest this level of support. Now this is known as what is called a reclaim of support, and then it pumps all the way back up, and then that's what a triple bottom pattern looks like. And I'm going into some examples on low time frame and high time frame, specifically using Ethereum as an example. So now we have Tradingview up. We're going to be looking at Ethereum. First off, I have it on the daily time frame, so we're going to be looking at high time frame triple bottom pattern. And the first one I spot is here in June, which was a very dark time for crypto. I don't know if anyone was trying to trade that. It's when we had a very strong downtrend, as you see here, right? We had this market structure break when we took out this liquidity low around 2100, took it out, started treating it as resistance, reject, price continues lower, breaks right below the neckline, which was a very important support level back in February of 2021 when we were first taking off. It was around 1280. So we broke through that, found a bottom. Price reacted, went to go retest that 1280 level, reject, came down to the same area again, a second bottom, price reacted again, rejected again, and then finally broke out, slight retest, and ascend. Alright, so that's kind of what it will look like. So basically, when you were looking back during this time period, everyone was like, oh, we're in this very tight range. It was going from around mid-June all the way to around mid-July. This was a whole month of just watching this play out, you know. So we're going to be looking at low time frame in a moment, but, you know, the gains are obviously much more, fulfilling when you're doing it on high time frame, because you could have went long here, right, on that third tap, probably, maybe you caught it around here, and you could have just simply put your stop loss right below it, and you could have first taken profit up here at the 1280 level, or held maybe up to here, right around this liquidity low. So I would have found a target right here, 1774, and that's how it's done, right? So that's how you would play that triple bottom pattern. Next up, I'm going to be looking at the hourly, so much lower time frames. And yeah, so right around December 22nd to today, I've spotted a triple bottom pattern. So we've had strong price coming down, right? Forget about this one, because it's like that first wick in the daily as well. We had this first bottom here. We came up to retest this zone that I have marked out, which was the beginning of that move up, right? That zone is going from 1230 to around 1245. So reject, comes down to this midline, up again, bottom, boom, boom. So it's not as clean on this hourly, but that's what I'm currently looking at, right? So I see here, okay, I've just put my line right here. We marked it once. We literally marked the exact same level again twice. And here, after that quick little dump, whoops, a quick little dump we had here, and it went all the way back up, right? So in a scenario like this, it's not as clean looking as the daily that we were just viewed a moment ago, but it's still the same concept. So now that I've seen prices reacted strongly, pumping back up to this 1196 resistance level, whenever it touches here, that is where I want to go long, right? So in this case, you probably missed it. So now what can we do? We want to use this information to make our assumptions. So yeah, we haven't really broken above here yet, so we haven't seen the breakout, so the pattern hasn't happened yet. What you want to see, it looks like it's about to. It's very strong, but it comes out, probably takes out this liquidity high, goes above 1200, slight retest, and then we want to see it continue up, probably in towards this level, right? So that would be my plan. So we would simply mark it here. I want to go long. If you want to be aggressive, you can start going long now, but there's really no reason to. I would wait until we take out that 1200 high and have a slight retest. You know, you want to show that we've reclaimed this level as support. You know, that'll be your evidence, so you're more confident into going into the trade. And you'll just simply place your limits. You could place your stop loss however your risk seems fit. And this is only 0.37%, so you could really have it below here and it wouldn't even be that risky, depending on, you have your leverage set to 10x and below. So I would do something like that. It's a nice 2.69. I'd probably go below this low here. It's just, you don't want that price action to come all the way back down. It'll kind of invalidate the trade itself. So that'll be the example. Ending this video, I'm going to break everything down that we went over. Just some of the rules. So first off, we always want to see price react strongly at a certain level 3 times. Not twice, not 4 times. It has to be 3. And then you want to see price go above that previous resistance, a retest of support, and that's how you play the pattern. That's where you would go long. Now you have your invalidation level for a stop loss, and you can target those previous lows or highs, right? So second rule, higher time frame from 4 hour to the daily, even the weekly, always going to be much more reliable. So it'll take much longer for the pattern to play out. As our example did in June, it took over a month to really see that triple bottom form. But the upside potential was much higher, because if you had went long there, you could have held it for a month or two and price went all the way back up to like $2,000. Right? So about, what's that, 40-50% gains, as opposed to if you're doing lower time frame, which is more for scalping, that's not something you can hold. Your invalidation isn't as reliable, right? It's not saying like, oh, I'm going to go long here, a triple bottom, and I'm not going to get stopped out. Like, you might see some profit, but if you don't take that profit, price might just come straight down and, go way below, right? So yeah, you always want to see that. Fourth rule be, you want to see that retest of the previous resistance. We broke out, had a retest, and then that's where you can go long, right? So you always want to wait for that retest to actually see the pattern, triple bottom pattern form. And then rule number 5, just have the invalidation below that previous wick. So your stop loss will be below that area, and you can be conservative with it. You don't have to put it there. Thanks for watching. If you appreciate the channel and you learned something, please like and subscribe. I'm trying to push out as much content like this as I can to try and help you guys. All the links are in the description of this video. If you guys want to sign up for Tradingview, if you want to sign up for BYBIT, my Twitter account, and our community Telegrams.